Well, good morning to you. Happy Friday. I'm Marlon Bowling, your tour guide to the ag commodity trade. It's here. It's finally here. Tammy, it's finally here. It's March 31st. Seems like we've been talking about this day forever. But anyway, it is finally here. Why is it important? Well, just a few things off the top of my head here. It's the end of the month. It's the end of a trading quarter. Oh, by the way, we actually have just a couple of USDA reports coming out, one in the form of a quarterly stocks report. No big deal, right? And then, of course, the prospective planning report, when USDA will take their first stab at what we may have for planted acres this year. Yeah, that's not very important. Actually, one or both of those reports typically can make a big market impact. And here to talk about it, I want to welcome aboard none other than Brian Hoops, the president of Midwest Market Solutions. Brian, this is maybe the one report day of the entire year that kind of has potential to really jerk the market around violently, and it could be from one report or both of them. They tend to have some surprises, don't they?
Good morning, Marlon. We really do. You know, you have a lot of moving pieces in today's report. There's typically about 3 reports out of the year: the January report, the stocks and planning intentions, final yield numbers. This report here with the quarterly stocks, planning intentions, and then the June final planning intentions and quarterly stocks numbers. Those are usually considered the 3 biggest market moving reports of the year. So, we expect today to give us a lot of fireworks, probably a very quiet type trade going into the report. There wasn't any private export sale announcements this morning, and that really won't matter past 11 o'clock. Once we hit 11 o'clock and probably right up until the closing bell, it's going to be digesting the stocks numbers, the acreage numbers, and putting in new balance sheet equations based off of those 2 things, because this will change our ending stocks projections considerably for both old crop and new crop once we get into the April supply and demand report.
So my device may be working after all. I looked at it a little bit ago and I didn't see any overnight export sale. And I thought, well, gosh, there's always something about now. But I haven't seen one. So now this will be the first time. We had 11 out of 12 days in a row where we had corn sales, and 10 of the 11 were to China. 1 was to unknown. But today, nada. And maybe that's it for a while. I don't know. We'll have to see if they come back or not. We do have some early estimates of the quarterly stocks numbers, and then we also have some early estimates on what they expect for prospective planting here today when those numbers come out. And I just wanted to run these by everybody here. For the quarterly stocks, we're looking at maybe 7.48 billion bushels, soybeans 1.75 billion, the wheat at 928 million. And then on the acreage, the expected acreage by the trade on corn is supposed to be 90.85 million acres, soybeans 88.24 million, and the average trade guess on all wheat, we'll go with that, 48.69. So that's the average trade guesses for when that report comes out today. I do want to look at the overnight trade here and just kind of scan across these here. The market was kind of quiet. The May corn overnight was up a half cent at 6.50. We had December unchanged at 5.67. You can tell we're getting close to report time. On soybeans, with the quotes provided by bar chart here, you had May up 3 3/4 at 14.78 1/4, and November was up just a penny and a quarter. And then you get to the wheat. In Chicago, May, we were down 3.5 cents overnight. Kansas City, May, it was actually 1 1/4 lower at 8.70 1/4. And the Minneapolis May wheat, it traded 6 lower this morning at 8.73 3/4. We'll come back and we'll talk with Brian about our livestock trade. Had a big move in the cash cattle markets, and, well, we had some quarterly hogs and pigs numbers too. We'll talk about all of it when we come back. Okay, well, we're back with Brian Hoops of Midwest Market Solutions. Brian, I noted where yesterday in the cash cattle market, as I was reading through the narrative here this morning, all of a sudden we were like $5 higher yesterday in the cash cattle trade. Is that right?
Exactly. Yeah. Anywhere really from maybe $4 to $8 higher dressed, and $3 to $4, $3 to $6 on a live basis, and it was good volumes too. So, we're at the end of the month, we're at the end of the quarter. not to say that we may not take some profits today, but we hit contract highs yesterday in a lot of the live cattle contracts. So it could be kind of a volatile day, I think, in the cattle futures. I don't know that we're going to see another push higher. In fact, I've heard some rumors that with the big surge in volume yesterday, some of these packers may be bought out through next week already, out until maybe April the 10th. They won't need cattle for a while, and that could see us pull back just a little bit in some of these bids, slaughter pace, and that could hurt our cash trade next week. But I know a lot of people wanting to think that yesterday was just the start of bigger things to come in this cattle market. And, I tended to agree longer term with that these cattle prices still going to work their way higher, but we may have a setback before we take that another push higher.
Well, and then after we closed up yesterday, we did get that quarterly hogs and pigs report. And by and large, I mean, the numbers didn't really change too much here. The all hogs and pigs number, it was up less than 1%. They call it slightly higher. Compared to December last quarter, though, it was down 2%. Kept for breeding number, same thing, just slightly higher than a year ago, but it was just slightly lower than last quarter. And the kept for marketing number, slightly higher again, but the change from last quarter in December was down 2%. Do you read much into those numbers or not?
There really isn't much to take away out of that hog and pig report. It came in exactly as expected. Maybe the one thing to look at was that this is the first quarter out of the last 11 quarters that we've had an increase compared to last year. So we starting to rebuild that inventory just a little bit. It's probably going to be a little bit of a pressure to the front months, but again, not anything outstanding really in this report to shake the market one way or the other. Maybe some of the back months will be considered a little bit undervalued. But again, I just don't see this report really changing the landscape of this hog industry.
Okay, we'll look real quickly at where we finished yesterday. And on the live cattle board, as we headed to the end of the session, we were up $1.35 in the June contract yesterday at 161 even. Feeders were up $1.92 on the May. They finished at 204.45. They're getting up there now. Lean hog trade yesterday had May up 32 cents at 84.75. Thanks, Brian, for all the help this morning. You have a good weekend. Brian Hoops,
you too.
Midwest Market Solutions. So, Tammy, that's a setup for today's market activity.